Hi everybody, I've got a refined big picture outlook specifically for Forex. When I was preparing for the webinar, the VTI webinar on that, well, I actually had an aha moment, and I came to the conclusion, well, just recently here now in March 2022, right, that we're going to see a big currency shifts into the next 10 to 15 years. So let's say into the year 2035. Now let's have a look how well what I want to talk about. Well, first about the big picture about the outlook, and then well, last week actually was an important week, right? That I think started this phase of big currency shift. So that means that we should actually see an upheaval on a global scale in different countries with different impact, and that will actually create a lot of volatility in the currency markets on the higher time frames, and that is always great, right? I mean, volatility is a trader's best friend, and crisis as well means opportunity. So crisis is ahead, and let's just see what the impact should be on the individual currencies. Now, I, I purely looked. I mean, sorry. I only derived with this new big picture outlook by looking at the charts, right, and looking at the monthly charts, and I got struck, right, and I had this aha yesterday, and let's just see. I mean, we have very clear the top four strongest currencies, and we've got the top four weakest currencies. Let's have a quick look. So the strongest one and the absolute strongest one you see indication here seems to be the Australian dollar. Second, very close. Second is the New Zealand dollar, then is the Canadian dollar, and then is the Swiss franc. Well, this comes from looking at the charts, right? Doing a relative strength analysis. But let's just think about, okay, what are the possible driving forces? Well, what are the clusters? Well, we can actually see that the top three, well, these are commodity-based currencies, right? And we have just started, I mean, we've seen over the last couple of months a tremendous increase in commodities. And I believe that we have just started a commodity super cycle. I talked about that during my last big picture update that was more focused on the dollar, right, on the weakening of the dollar and subsequent strengthening of all hard assets or commodities. And we've actually seen that starting like going off like a rocket. If you look at the metals, precious metals, but as well the other metals, copper, for example, palladium just made a new high, but as well the energies, right? Crude oil, etc. So these are commodity-based currencies. So if commodities go up, well, it's not a surprise that commodity-based currencies go up. Why? Well, because these countries do well, right? These are exporters of commodities, miners, sellers, and exporters. So if the price of the commodity goes up, well, they do well, right? And when they do well, well, there's more money inflowing. There are big money inflows, right? Investments into miners. The economy will do better, so there will be a lot of money. So they will attract global money, right? And whenever money flows into a country, well, that should increase yeah, the value, right, of that currency. Now, what about the Swiss franc? Well, that's not a commodity-based currency, well, but that's a safe harbor currency, right? Switzerland never had a war in its history, and it's very it always keeps itself very neutral. It's not part of the EU either, right? It's embedded within the EU, like geologically, but it's not part of the EU. So they always played a very special role, and it's basically a safe harbor currency. And if you look at the Swiss franc chart at whatever other currency, well, you see that it's a super strong currency over many years back. It's a small currency, but it's perceived as a safe harbor. So this is another interesting fact, right? So there seems to be some upheaval in the world, so that a safe harbor is actually needed, right? And that money flows into that safe harbor. Now let's have a look at the bottom four. So the weakest of all, like with a big gap, the weakest of all currencies coming from the charts. Well, seems to be, I'm pretty sure, seems to be, and we're going to have a look at the charts, seems to be this the Japanese yen clearly it's the weakest of all, same as this is the strongest of all, the Australian dollar. Well, the second weakest is the US dollar, the third is the euro, and the fourth is the British pound. Now let's have a look what might be possible driving forces. I'm just guesstimating here, right? Well, the yen is actually the highest indebted country in the world. Well, let's leave apart like African countries, Venezuela, etc., Argentina, so from the higher ranked countries, right? Japan is the highest indebted country in terms of debt per GDP. I think it's above 250% debt per GDP. The US is slightly above 100, and the European Union, like the average of the European Union is around 100. So Japan is extremely high, right? As well, the US, right, it's very highly indebted. It's above 100%. The euro, well, the euro region, right, and the British pound. So what is the cluster here? Well, we have got geopolitical events to be very close, right, and geopolitical tensions. I mean, the Ukrainian war just started. I think it's 2 weeks ago, right? Like the Russians starting a war with Ukraine, and it doesn't seem to be. I mean, if these come up on the monthly chart as sustained with sustained weakness, something is going on, right? And I think it's geopolitical because of the closeness of Europe and Britain to Russia, right? I mean, this has been going on for many years, right? This clash, geopolitical clash of the NATO, well, led by the US. NATO, well, like all European countries are part of that, right? The US. It's basically a Western military alliance coming from the Cold War. But once the Cold War was over, I mean, the Warsaw Pact was diluted, right? It's no longer anymore. Well, NATO still is there. So that's a Cold War relict, basically. And the NATO has enlarged its scope more and more towards the east, towards Russia. And Russia basically feels threatened, right? And well, this is a geopolitical tension. Former Eastern countries like Latvia, Lithuania, etc. I mean, they are part of NATO, and Ukraine as well wanted to become part of NATO, but it's right bordering with Russia, and they have the fear, right, that if rockets are placed in Ukraine, it's 500 kilometers from Moscow. So that's a threat, and these are serious geopolitical tensions, and it doesn't seem like this is going over soon, unfortunately. So if this continues, well, we've got an outflow of money out of the euro and out of the British pound. And with these sanctions being set up against Russia, I mean, they want to restrict imports, oil imports, gas imports from Russia. This will have a serious impact on the economies. I mean, they will go down because energy commodities, well, they will skyrocket in the region. Not necessarily on a global scale, but in the region. We've already seen that in the Netherlands, gas has tripled in price because they don't get it locally. So we've already seen last week big spectacular moves, and this actually continued into this week. We saw a counter rally move, a snap back to moving average. So what did we see last week? We see a tremendous weakness of the euro and the pound on a monthly chart, and on a weekly and a monthly chart, weakness of the euro and the pound. So it's this, right, the weak currencies. And we see strength into Australian dollar, New Zealand, and Canadian dollar. So we actually see this, right, weakness of these and strength into the top four strongest currencies. So I think we have just started a big currency shift, and this is the new term I actually want to use. We'll see if this actually continues. That's a hypothesis. I think we're going to see a lot of moves on a weekly and a monthly chart, and if that happens, well, these are great trading opportunities, right? So just a quick note. I mean, the strongest four and the weakest four. Well, I'm talking about the 30 most liquid currency pairs, right? Obviously, there are weaker ones if you go at these less liquid currencies. Right. So let's have a look now at a chart. So that's a monthly chart. They're all monthly charts of the US versus the yen. So the yen should be the weakest of all currencies. So it should basically fall apart. Well, just remember here on this list, the dollar is weak as well, right? It's the second weakest currency. Now let's have a look which is weaker, right? Is it the yen or is it the dollar? Well, it should be the yen. Let's just have a look here. So both are weak. But we have got an S1 pattern here, right? This is a very strong momentum move. That's a multi-year consolidation pattern. Well, that's an S1 pattern. And we have stop run levels here. So the bears try to break through, right? This flat several times. So we basically have a quadruple bottom that tried it tried to go through the 200 too, and it was a support. Now this is a breakout, this is a rebreak, and off it goes. So we've just started, right, a stop run move. We've taken out the first one. We see the push higher, and now we're basically testing the next one, the next one, the next one, and there are other stop run levels. So this should actually go this direction. The US dollar is already weak, well, and the yen should be much weaker in the years to come. So it basically says the yen should lose tremendously in value against an already weak US dollar. And if we look how long it took for the momentum move to develop, well, that's a couple of years, right? So this could take a couple of years, this process, and beyond. So why should this happen? That the yen is losing tremendously in value? Well, we might actually see that that Japan gets really in difficulties with their high levels of debt. Should the interest rates increase, I mean, they're quantitative easing like never before. Like, they're keeping the interest rates low, right? Should they not be able to keep that up? I mean, if interest rates increase with such a high debt level, they will be in serious trouble, right? And there might be panic, and there might be capital leaving the country in panic. So that's basically a possible scenario, right, for the big picture that could justify what we should see here, right, based on this monthly pattern. Both are weak, but the yen is much weaker than the US. Now let's have a look at the Swissy, right? So the Swissy is small currency, right? But it's doing fantastic. If we look here, well, that's a chart back into 2008, right? That's when the great financial crisis started. Well, since then, well, you can look even further back. The Swiss is very strong, and we see a big down move, right? So the big financial crisis, well, helped the Swissy a lot. The purchasing power of the Swiss skyrocketed, right? Very strong Swiss. Well, then they decided, because a strong Swiss currency, well, it has actually created problems for their economy. I mean, they've got quite good companies and products, and they're exporters, well, it hurt their exports, a strong currency. So the Swiss National Bank, the SNB, decided to fix the Swiss franc level to the euro, because the eurozone is their primary export region, right? So they've pegged it to the 120 level, euro Swiss, and they could keep this peg up for a couple of years. Well, not forever, right? And then once they had to loosen the peg, it was just too expensive for the national bank. Well, we saw this down move. Well, it's basically only catching up, right? What would have happened anyway. So we see another strengthening of the Swiss, breaking to a new high. Then we saw a pullback, pulling back to the pip, to the 120 peg level. It was quite fascinating. It's just a pullback within an overall downtrend, and we are now very close. Well, now we have just touched this last week, right? We've just touched the par level, the one very important psychological level. It was touched before here, or it was tested before. That's a huge level, right? That's a huge psychological level, and a stop run level, and this is just below. So we should we get there, and we might get a pullback now, right? And I mean, it's making lower lows and lower highs. But should we cross over this area, that's a huge level, right? And we might actually see it drop, the euro versus the Swiss, meaning that the Swiss should get much stronger and the euro losing in value. So why should that happen? Well, we might have a political event where people are scared, where money is fleeing into a safe harbor, and the safe harbor is the Swiss franc. Well, let's have a look at the Swiss franc from a different perspective. Perspective US Swiss, right? So the US dollar is weak as well overall, and we can see it well as obviously as well against the Swiss. And I've been talking about that for a couple of years back now. Well, since here basically, right? I started to talk about this is an S1 pattern short, and it has triggered here, it has triggered here, it has triggered here. Well, it couldn't go off, it came back. It has triggered, it has triggered here again. And after this long consolidation, it seems like a time. You just remember, the longer the consolidation or the bigger the move you can expect. And what is the prime momentum move? Well, it's this huge move. You see big consecutive big red bars only intermixed with a couple of small green ones. So this is something similar we are looking for, right? For this momentum move. Well, it has started, it has made a first cautious first leg, right? It has gone down, taken off this level. Now it's pulling back, making another consolidation here. Well, we see a coil, right? Price action is coiled, squeezed against the 21, and we see the bars are getting smaller and smaller. It's a volatility contraction on the monthly chart. And should we leave that, we should see a second leg down. And the next target is this very strong stop run level, the wick low and this wick low. So we could actually see here a lot of momentum going on. So we should see the Swiss franc gaining quite a bit in value. And if that happens, well, we should hear about that and read in the news, right? Because this will be some geopolitical tension that triggers fear on a global scale. Now let's have a look at this pound, so weak currency against a strong currency, pound Kiwi. Now this is a special situation charting setup. Why? Well, we've got two S1 patterns short. This is one, right? It didn't, well, it broke to a new low, but it didn't show follow through. But what happened is the second consolidation pattern. So it's an S1 right after an S1 short. Well, that was an entry here, it didn't go off. Again here, we're consolidating, it takes time, right? Now we've got a second entry. So this is double pressure, right? So these two patterns basically, I mean, they're going to drive this same momentum move. When the smaller one will drive this momentum move, right? And this overall will drive this one. So that's why it's double pressure. We've got two patterns and two energies, right? Energy is building up here with this one and with this one. And the time it takes to go off, right? It's clustered with stop run levels, and we should actually go towards the par level as well over the next couple of years. So we should see pound weakness and Kiwi strength. How could that happen from a fundamental big picture perspective? Well, we could see geopolitical tensions in the Russian European area, right? And we could see commodity prices go up. So that would lead to suffering of the British economy and actually striving of the Kiwi economy. Now finally, let's have a look at the euro dollar. Well, they're both weak, right? Euro and dollar, but the euro is stronger. Like the dollar. If you just go back to the list of the weakest, so the dollar should be weaker, right, than the euro. Well, just slightly. We've got two errors and this is one error. So they're both weak, but the dollar is even weaker. Well, let's have a look now at the euro dollar, right? So the if the dollar is weaker, well, then we should actually see that price goes up. And what does the multi-chart, the monthly multi-year chart, what does it tell us? Well, we see a multi-year consolidation pattern. It's all this, right? This started back in that's 2006 2006, so that's a 10-year, 9-year. It's a multi-year consolidation pattern. The longer it takes, I mean, the stronger, right? This is the momentum move. So we're basically going back here into 2001, right? This is when the momentum move started, and then we've got this big pattern. Then we've got a long, like it takes really long here. The activity, the breakout activity, the longer it takes, the more energy is stored. So currently, the euro dollar, well, it's basically we are stuck in a range, right? So it doesn't really show which one is stronger and which one is weaker. But the weakness of the dollar should actually show in the next 15 years into 2035. So what we've just seen here last week is what we saw, or over the last couple of months, we saw that the dollar gained in strength, right? But as we're stuck in a range here, well, that doesn't mean a lot, right? I mean, we see that it moves down, it moves up, it moves down, up and down. I think this is just a down move. It will find support here, and we will actually, and this down move actually gives the bulls the confidence to come up here, like to test the upper range, and then to re-break. This green line is a very important line. Well, that's a flat line of the S1. If this re-breaks, and it actually clusters with the 200 moving average. So this is basically the big picture outlook, right? That the euro dollar re-breaks this line, and then all hell should break loose, because that's the most important currency pair, right? And if it re-breaks, well, then we're off for these stop run levels into the target up here. So that's a big, and that's very far away. And both being weak, right? I mean, something is going on with the dollar. And I assume, well, it has something to do with the US debt levels, or it might as well be geopolitical tensions. I mean, the Cold War is over. It's more the European countries that are involved now with Russia, but who knows what is going to happen in the future. I think here dollar strength is short-lived. Why? Well, we can look as well what happens with the commodities, right? Metals, gold, silver, etc. We had a big bull run during the last couple of months, and we have very strong long signals as well based on patterns. Now this is strange, right? That you get long signals and the dollar gets stronger and stronger. Well, typically, like on average, there's a correlation. Like a weak dollar actually supports increase in commodity prices overall, because commodity prices are paid like on the global market in dollars. So if the dollar goes down, commodity prices go up. So we have this relationship, right? So but dollar went up, but still commodity prices went up too. So just imagine if the dollar weakens, and this is a long way to go, right? Like if the dollar weakens, let's just take as an example gold and silver. They have already increased quite a bit, right? But if the dollar weakens, I mean, we'll see gold and silver be on fire. Not only those, right? Copper and all other hard assets too. And if we break the flat, well, this is an important level. You will read about in the press, right? That this is the new, I don't know, this is the new decade of high commodity prices. We will see things like that, right? And they will jump on that story. So let's just see. I think we don't break to a new low, right? This is the par level. We came very close here. It didn't. Well, should this fail, right? This hypothesis that we're going to re-break, like should we break outside of this range, or should we actually go through the par level? Well, then this is another great trading opportunity, right? Because these are stop run levels. It's a big psychological number, the par level. Well, then you can trade this obviously short into a strong dollar, and that should then actually be the last move for a strong dollar before it falls apart. So this could still be the case, right? That it makes another move down, maybe towards this level, and this is it then. But I don't see it. I mean, somebody is telling not the truth here, right? Either the commodities are right, and the commodities talk about a weak dollar, or the euro dollar is right? We don't know. But as all commodities are in an uptrend, and even natural gas now is joining the crowd, I think this is a fake move, right? It's just a move within a sideways range, and we should actually, yeah, see how it recovers quite a bit, and then re-break, and then starts to run towards the target level. Well, let's just have a look here. I mean, last week was a week of huge opportunities. Let's just see, okay, in this big currency shift, the next 15 years, well, what can we expect? Well, we can expect big moves, right? Let's have a look now what we actually saw last week. Well, last week was this red bar, right? This weekly bar is a big red bar. Well, these are the type of things we're looking for. We didn't see any such big sized bar, right, in the recent past. So that's a euro odd, right? A weak currency with a strong currency. When we saw this move from a weak one into a strong one, a 1 week big red bar. Well, it's breaking through stop run levels and breaking through, testing the big number 15,000. Now, how does it look like on the daily? Well, we saw this big move, right? That's a slingshot move, and that's successive selling on a daily chart. It's basically an exponential chart on the downside, and whenever you have such a chart, well, you get a ton of patterns. We know that from cryptocurrencies, right? You get a ton of patterns on all time frames, especially the smaller ones. And let's have a quick look what's David. David from Canada, he lives in Toronto, how he traded this move, and how Jamie traded this move. I just took out his real name from my last presentation. So he's a medical doctor, full-time doctor, right, in Australia. And let's see how they both traded this move on a 5-minute and on a 1-minute chart. Obviously, they live in different time zones, and they've traded different patterns, right? So this is what David did. That's a 5-minute chart, and he basically started to trade this when this level got broken, right? So he didn't get this part of the move, but he caught this part of the move. Like Jamie went in earlier. Jamie went in up here and drove it down. Now Dave went in here, but he piled in, building a pyramid. Now let's see what he did. So this was the first trade on a 5-minute, an S2 pattern. It didn't go off immediately. Well, then we saw this. Well, then we've got another pattern, another S2. Well, it went off immediately. Then we saw another pattern, long stretched, another S2, and it went off nicely, right? So now it's a 3 scale in pyramid. So he's built a nice position. And as the daily chart, right, as this unfolded, well, he piled in, and he's seen that, right? He's seen these stop run levels. As this unfolded, well, he was convinced and clear in his mind that this is a huge opportunity, and that's what he did, right? He just scaled in with every opportunity coming up. There was nothing. Well, then there was one here. That's an S1 pattern. This is on a 1-minute chart, and another S1 on a 1-minute chart. Well, this price continued lower on the Monday open, and then came back and stopped him out with an overall result of 24R, right, for this trade pyramid. So that's fantastic. So if you think about 24R, well, that's basically the minimum 5-month goal we're looking at with one trade pyramid, and it took him basically 2 days, right, to bring that up, the 5-month goal. Now let's have a look at what Jamie did. So Jamie in Australia lives in Sydney. Well, he traded the same, and we can see here how it worked out, right? He traded the same chart, euro odd 5-minute, but he got in earlier, and we can see how he got in. That's an S2 pattern where he got in, and he got in like before, actually, well, at the beginning of this big shift, right? Big currency shift, let's call it. And these are stop run levels, and we know how that turned out. Let's have a quick look. He got in basically here, right, and rode all this big move down based on this S2 pattern, right? So he didn't scale in, but he just traded his stop. That's the exponential down move, and then he got in, then he got out at a 20-hour result, right? Um, well, that was not the only trade he took. He took a couple of other trades, and his overall weekly result was an astounding 122 R for the week. And I just adjusted the math. So 122 R for the week. Well, that's basically a 2-year, achieving the 2-year minimum monthly R goal, right? Within a couple of days only, within 1 week, right? Based on a couple of great trades that were coming, right? From such a big move. Well, it was not only the euro odd that showed big moves, right? We saw pound odd, we saw euro New Zealand, pound New Zealand, and we saw these big moves. And this is why I mentioned it here in the beginning. We saw these big moves out of the euro, out of the British, into the Australian, Kiwi, and the CAD. So these were the big moves, right, from last week. Well, last week and this week, this week we had a snapback opportunity, right? Whenever prices are overextended, are overexhausted so much to the downside, right, from the moving averages, well, what you can expect is a snapback, right? So you trade it in the opposite direction. This is actually what we got. I mean, this went up here basically as the days continued, and this allows for a snapback of it, like trading long, basically, right? What we have traded short before, well, you can trade long, and this is basically what is involved here in this big picture outlook of the big currency shifts. We should see big moves, like big trend moves cutting through stop run levels, and then we should see big counter trend rallies, right? And this is a new big picture. We haven't seen that much before, right? If you look at these bars, it was more like an orderly chart construction. Well, we should actually see this to change quite a bit, right? We should see more big bars coming up in those charts we have checked before. Now this is David's 5 trade pyramid, and this is Jamie's. So this is it basically. This is the end of what I wanted to talk about. So just keep in mind the focus actually for the next 10 to 15 years might be to trade these long, right? These charts long, and these charts short. So you can combine, right? Those like the odd yen, right? Should be the strongest moving chart basically. You can combine the odd with the dollar, odd with the euro, odd with the pound, and vice versa, right? The Swiss with the yen, the Swiss with the pound. So these are great combinations. Any combination of the upper list and the lower list gives you a trending chart, right? And with these possible driving forces, we have to see if this gets confirmed, right? If commodities actually start to continue higher and higher and higher over the years, if you get more tensions looking for a safe harbor, if this is getting more and more serious, if the interest rates cannot be kept at a low level, and if we see more geopolitical events. So if this comes true, right, then this should unfold. And the charts, the patterns, they position themselves before quite well, before any news are coming up. So I don't like what I see here, right, except increasing commodity prices. I quite like that, but there seems to be upheaval in the world, right? Safe harbor, debt crisis, war, geopolitical events, sanctions, crisis, right? Economic crisis. Unfortunately, this is how the years ahead should look like, and if that happens, these are crisis areas in different different areas, right? I mean, it's commodity, it's risk, global fear, it's debts that has accumulated over the last 70 years, and it's war. I mean, that has been brewing for many years too. we're basically coming, we are coming towards a culmination point where, right, where all these different things are coming together, and that adds a fuel to the fire, basically. And that fire, well, that creates these big currency shifts we might actually see in the next 10 to 15 years. So if you know what's going to happen, but you're not surprised, you're not getting scared, if you know what's going to happen, crisis is opportunity and volatility is opportunity anyway for traders. And when we might strive really well financially over the next 10 to 15 years. So looking forward in that respect. Thank you.